So I actually tried using a whole life insurance policy to create some passive income. Some people say it's a scam, while others people say it's genius. But here's what actually happened when I tried it for myself. So let me take you back, because when I was a financial advisor, when someone talked to me about whole life insurance, I would say it's the biggest ripoff, never do it. But then all of a sudden when I started meeting with people that were real estate investors, people that actually were financially free, they would tell me things like, oh my gosh, Chris, you got to try this infinite banking concept. I'm like, what's the infinite banking concept? Never heard of it in my life. And by the way, I was a financial advisor for 4 years. Never heard that concept before. They said, oh, it's amazing. You get this whole life insurance policy and you can use it to, like, instead using a bank, you use the whole life insurance policy. I said, well, why would they do that? And by the way, isn't whole life insurance a ripoff? They said, no, it's awesome. So anyways, I started to learn more about it. I drank the Kool-Aid because all these real estate investors said it was great. I bought it myself. I remember thinking, this looks really expensive. Like, shouldn't there be like levers they can pull to make this more cash rich? And the insurance agent said, no, you can't do that. Like, if you try to do that, you'll get taxed. And I said, well, I don't like getting taxed anymore, so forget it. I'll just do what you say. So I did that. I kept that policy for over 2 years, put 25 grand into it over that period of time. But when all of a sudden I was in a cash crunch, right? When I needed to when I realized I don't have the premiums to keep paying into this $1,000 a month all the time, right? I called up the insurance company. I said, listen, can I stop making premium payments for a little bit? And they said, no. If you do, you'll lose the policy. I said, well, this stinks. Why is that? They're like, well, because you don't have this cash value. This tax-free savings account is empty. So because you only have a couple $100 in here, you can't really do anything. You need $1,000 to keep this thing going. And so what happened is I lost my policy. 25 grand paid into it. It was completely gone. Now, I didn't know any better. I just thought, well, the recession sucks. It's just what is. But it was just months later, I realized as I started digging deeper into the research, I found out that insurance agent lied to me. That I could have actually pulled different levers, made it cheaper to where more of my money went to cash from day one. And if it had done that, I wouldn't have to always pay $1,000 a month. I could have maybe paid $300 a month instead. And guess what? Even if I couldn't pay $300 a month, if I had at least that much in there in the account, which I would have had thousands if we would have designed it the way I do it now, would have had thousands of dollars in this policy, I could have ridden several years of the recession and not had to pay a dime. And that's the thing, is that the hardest part about this whole strategy is that insurance agents, you're just relying on them blindly, hoping that they're giving you the best thing. When in reality, the vast majority, 99% plus of insurance agents out there do not do the best thing for you. Either one, because they don't know how to make it work best, or two, because they don't want to. Because here's what happened in my situation. I confronted that agent. I said, listen, you could have done this better like I asked you initially, and you didn't do it. And after we debated back and forth, he just said, Chris, I did it that way because I couldn't afford to cut my commissions. I was like, well, there's the honest truth. You picked your family over mine, and therefore, and by the way, I sent you my family and friends to do the same thing, and you ripped them off too. And so I say, I'll never send you a client again. And by the way, he doesn't even do insurance anymore. So there you go. But this is why we started to do it ourselves. So here's how you can make sure that your policy is actually designed the right way, best for your needs. And by the way, this is not for everybody. This is great if you've got at least $5,000 or so a year you can save. That's great. If you can do that, awesome. If you're paycheck to paycheck, do not do this strategy. It doesn't work, okay? Just get a simple term policy that can be converted to a whole life policy later. That could be great. But right now, don't worry about that. Secondly, if you're in bad health, this may not be a good thing for you to do. Also, if you're over the age of 70, it may not be a good thing. But here's the good news. If you have bad health or you're over the age of 70, you can get your policy on other people, other family members, business partners, people that you have an actual financial self-interest in. You can actually put the policy on them. I had one guy that was in bad health in his mid-50s that even though he was young enough, still he was like 400 pounds. And so I said, well, what if we do it on your wife who's super healthy and she's younger? And by the way, women live longer, so it's cheaper anyways. Do it on her. And so he was putting in over $100,000 a year into his policy or into his wife's policy so then he can use that money to actually make more money. And that's the thing, is like, how do you make sure your policy is actually made for infinite banking? Now, just so you know, any whole life policy can be used for infinite banking. The real question is how fast? Because the policy I had to wait at least 3+ years before you could maybe use some of it, right? For most of those type of policies, those typical policies where you have no money in them for the first couple years, those policies, I think, in pretty much just about every situation, is bad. Those are not the policies I like. I like ones where I have at least 75 to 80% of the cash I paid in year one, which, by the way, year one is the most expensive year with whole life insurance. Because unlike term insurance, which gets more expensive over time, whole life insurance is more expensive up front, but then gets cheaper over time. So usually those first 2 years are those key years that it's the most expensive. But if you can minimize those costs as much as you can, now it allows your cash to grow faster, allowing you to use this policy even faster, even if it's in the first month or so. You can actually use that money. I have people using this as their emergency fund. People that say, hey, I'd rather make 6% a year tax-free versus nothing percent taxable in my bank savings account, right? Even if they get a CD and they're like, yeah, but that's 5% and I still get taxed on that money. I do better with 6% tax-free, right? So people will do that. They'll put more money there. They'll use that money that might pull out to go and invest and do some different cool things with. There's all kinds of options. Walt Disney actually used this to help finance Disneyland. When ABC wouldn't come in with all the money, he pulled money from his life insurance to use that as a down payment so that ABC would come in with the rest of the money, and he created the happiest place on earth, apparently. And some of you guys got the ears to prove it, don't you? And so there's so many cool things you can do with this. Now, I'm not going to go into all the depth of this, but remember, you want to make sure you structure it the right way. So the way to do that, if you want to take that next step, is go to moneyripples.com/infinitebanking, and you'll learn how to structure your policy so that you can do it the right way and avoid all those costly mistakes that I made myself. So go to do that today at moneyripples.com.